Hi, Tim Bigham back again for Delta Derivatives, option hedges and edges, powered by the best option scanning tools on the market today, rbtrader.com, and looking at a market that finally is having a little bit of downdraft. Certainly, we've been mired in this kind of 1% trading range for well over 2 weeks here, but it looks like we may be making a move to break out to the downside here, given lower oil, given that Japan didn't come through with that big bazooka, right? So some disappointment there on the free money front. Obviously, slower growth, GDP, lowered. So I think it'll be interesting as we get through this week here, what happens as far as the market. We do break down, certainly some room on the chart for a bigger pullback. But as always, taking a look at those option scanning tools, being more opportunistic than tactical here. So looking at CRE research that saw big call volume yesterday on the weekly options that expire this Friday, the 29 calls. I went ahead, sold those, bought next week's 29 for a simple calendar spread trade, paid about 20 cents on that, just looking for that implied volatility to revert back. Hopefully CRE pops up a little towards 29 would even be more ideal here. And speaking of oil, we saw some big call volume yesterday in names like Exxon, Chevron, the big three, ConocoPhillips. Even with oil getting hit, breaking below 40, the stock's getting hit hard. Call buyers emerged near the lows here. I kind of followed along with it in a different way. I sold out of the money puts to position to be a buyer on further weakness here. So using that big option volume that was bullish in nature and jumped up implied volatility, I elected to take a bullish stance by selling puts to take advantage of that implied volatility. Also give myself a little safety here. I'm positioning out in September about 3 to 5% lower than where the big three, Exxon, CVX, and ConocoPhillips are trading, to be a buyer on even further weakness. Oil stocks have been hit hard. I'll be a buyer on another, say, 5% drop from here. And you're looking at dividend yields down at that area getting very attractive as well. So as always, in this kind of market environment, looking to stay nimble, keeping the position sizes smaller. The fact that we were in this long extended trading range with the VIX mired, broke below 12, options got very cheap. Usually that tends to, remedy itself in a not good way. So I'm a little more bearish than normal here, certainly. I'd be a seller of rallies here and certainly look to, with a little vol spike today, take advantage of that implied volatility jump. So until next time, this is Tim Bigham, and as always, here's to good trading. Take care.